And just like that, we are back. Okay, I hope everybody has had a really good trading week thus far. I'm making this on Tuesday, but this is actually for Sunday. So I'm not going to have a forecast video for this Sunday, but I will start the forecasting videos up again for next Sunday. And then I will throw in like strategy videos and just techniques and things like that, things that I've tested or things that I've studied that I feel like will be helpful. So what we're going to do today is I'm going to go over a quick strategy with you that I've tested over the last week that has really made me a lot more confident in my trading. So bear with me, trying to get my footing, trying to play a little bit of catch up, no mustard. Okay, so what we're going to do, I'm going to just jump in. I'm going to start with EJ on a daily, right? So I know for me, and even still sometimes, this can get a little kind of confusing. I'm going to take you on a small amount of series where we're going to go through a lot of just different things that I've learned over the time, and hopefully it'll be helpful to you. But what I've recently learned, and I have been using this for a while, but I've just learned better ways to use it. But what I'm talking about is the Hakanashi. So I've used Hakanashi for quite a while because when I was starting out, it was just easier for me to grasp what was happening with Hakanashi in the way that I did a little bit of study on it prior to help me get my footing on what the market was doing at the time when I just really didn't understand what was happening. So the Hakanashi chart is up here. You can actually choose, if you do the little toggle, it'll be in here. I think I actually ended up choosing mine as a star, so that's why I've starred mine. So that's why mine shows up like right here, because it's usually my go-to. So it's a actually pretty easy concept to understand because they've simplified it, when it comes down to the Hakanashi chart. So up in the green is obviously for the bulls, or for the, bullish, and then down is bearish. Up is bullish, down is bearish. It's really easy to understand, but I am going to go into a little bit more because I feel like I learned some things that I think you're going to love. So better to use the daily chart. Of course, it's always good to scale down and see what the hell's going on, the 4 hour, the 1 hour, stuff like that. But the 1 hour is going to be a little bit more noisy. I would stick with either the 4 or the 1. And actually, you should probably use both of them as confluence to help you. So, easily said, with the bulls, or anytime the market is in the green on the Hakanashi chart, what you're looking for is no shadow on the bottom. So all the shadow on the bull side for the green candles, you want them to be on the top, not at the bottom. That means that it's going up. There's a lot of momentum. Same or vice versa when it comes down to the bull side. Momentum, if there's shadow on the bottom rather than on the top. So you don't want any shadow on the top. Even though there was a few shadows here on the top, a little bit, it still had enough momentum to get us to here. Still had enough volatility to get us here. Don't mind these. These are just some of my main bank levels that I try to keep on my chart. I don't want to mark them all because I don't want to make it all messy and hard for you to understand. I'm just trying to make it the easiest for you to understand. Another thing about the Hakanashi chart, when you see dojis, that means two things, and it could be in conjunction. That's going to either mean that you're going to run into a reversal, or you're going to actually run into congestion or consolidation. I say congestion, but you're going to either run into some consolidation or you're going to run into congestion. So it's easier to use this chart because I'll zoom in here a little bit so you can see, when, I'll give it this guy here, in this area, you're starting to get shadows. You're starting to get shadows on both the top and the bottom. And it doesn't matter whether it's in green or in the red. If you're getting shadow on both the top and the bottom, that means that soon thereafter a reversal is getting ready to start. This is super helpful, especially when you're new. You don't really know exactly what's going on. But this is sediment. This helps us to see sediment. Sediment is measured by the color and the size of the candle. And better defined, sediment is a measurement of how traders and investors view the outlook for the market and the longer economy. Or long story short and easier for you to understand, sediment indicators help identify entry and exit points. So these are perfect for when you're entering and or exiting your positions. It's also helpful just if you're just looking for something to kind of help you along as you're doing your trading, your day-to-day trading. So a couple things to keep in mind when the body starts to get smaller. There's another space right here. When the body starts to get smaller, I'll even do these. When the body starts to get smaller, that means that you may see a little bit of consolidation. This is like a few days of consolidation, and then you're going to see a reversal. Or vice versa. It either means consolidation, reversal, or both. So that's something to keep in mind. Just keep that in mind when you're going to use the Heiken chart. Now, the newer stuff that I've learned about the Heiken chart, I just learned, and I've been back testing this week so far, and it's been super helpful. Like I said, it's made me a lot more confident. I'm going to show you something else as well that goes kind of hand in hand with the Heiken chart. So I'm going to come up here to my indicators. I want to say it's probably already up here. The relative index on the 14 close. So let me show you how I use the two of these together. I don't know why this, let me see. I'm going to just, if it'll let me here. Oh, okay. All right, so the yellow I want in white, and this is just my preference, just so I can make the one that I want to see a little bit darker and a little bit thicker. Okay, so rule of thumb here, I need to stretch this out a little bit so you can actually see what's going on. All right, and you can actually put, let me see if I can put this trend line right here on the 50. Just so that we know. Oops, you know what? I'm gonna make I don't want that as thick. That looks a little freaking crazy. That's fine. Whatever. Okay. Okay. So using the two of these in conjunction, so now that we have this on the 50, I'm going to squeeze this up just a little bit just so that it's not so big and it fits a little bit better. And then we can see everything. Okay, so I'm going to come back to this section right around here. I'm going to get rid of these guys. All right. I'm going to use, right here is my example number 1. So when you use the Heiken, you can also use the relative index, strength index here at the bottom to give you another confluence. So the best thing when you're trading is to have confluences. You should have at least minimum 2. But if you want to be on the more safer side, I would go 3. I do 3 personally, because that makes me a little more confident in any kind of trade that I'm getting ready to take on. So I'm going to use this spot right here where I'm at as an example. Down here on the RSI, when it's crossing over the 50 point, it's headed up towards the 70. That's bulls. It's bullish all the way. Same thing here. You can use this as confirmation. I don't know why it's so slippery like this. It's so damn weird. It's getting on my nerves. Anyway, right here, where it's crossing over the 50 and going down in the opposite direction. Same thing if you match it up here, right where the 50 was, where we at? Shit. Right here. From here, let me get this. Where we go? All right, from here to practically there. So if you can tell, matching it up. Let me see if it's gonna let me do this down here too. You're learning with me. We're pulling it together. Here we go. All right. Matter of fact, let's just take this straight up. Oh, it won't let me. Okay, never mind. That's fine. Okay. So if we're just matching with the same, so matching this and this, you see where it crossed over the 50 heading down over the 50, you could take a short position. You see where it's coming up here and it's crossing over the 50 again, headed up, you could take a long position. Now granted, you wouldn't be taking your long position until about this candle or this candle if you're being super conservative. But it just depends on what kind of trader you are. If you're one of the traders that is ready to take a risk and risk it all, that's fine. Some people like to take a little more caution and be a little safer and wait for those confirmations in order to actually get into the position itself. So if you use Heiken Ashi in conjunction with the relative strength index on 14, this has been gold. This has truly been gold for me. It's made me way more confident. I have been able to put on trades and feel way more confident in they're going to go the direction that I believe that they're going to. Now, of course, this is not the only thing. You always want to do other confluences or use other pieces to confluence to make sure that you're going or headed in the right direction with your trades. But this is definitely a good helper. This video has already been long enough. I am absolutely so thankful for you. Again, and always, like, share, and subscribe. If you come across something that there's something, if you come across something that there's something, if you come across something that you want me to look into for you or go over and study a bit, I'd be more than happy to do so. Have a great rest of your week.